Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Inflation optimism. Asian stocks extend Wall Street's rally after a soft reading on US factory prices adds to hopes for a rate cut. But the Fed's Raphael Bostic warns he wants more data before easing. We're going to preview today's key CPI print. Stepping aside, Japan set to get a new prime minister after Fumio Kishida says he will not run for a second term as leader of the ruling LDP. Plus, UBS posts higher than expected profit in the second quarter as net income hits $1.1 billion, smashing the estimates. We're going to bring you the details. So a massive beat coming through from UBS just in the last 15 minutes on the second quarter. Net income, as we said, coming in above $1.1 billion in the second quarter, about double the estimates of $520 million. UBS still saying, we know this is crucial to investors as well, still targeting up to $1 billion of share repurchases in 2024, reaffirming their plans around capital returns in 2024, saying that they do have that resilience on a balance sheet. UBS also on track to reach profitability levels pre the Credit Suisse merger. They also see that momentum, by the way, continuing into the third quarter and flows into the wealth management business as well of above $20 billion. So the details coming through from UBS. Top line is significant beat coming through for that Swiss lender. And at 7 a.m. UK time, we're going to be speaking to the UBS CEO, Sergio Amotti, on those earnings from the bank. We're getting more details as well in terms of the numbers crossing and the context just in the next couple of minutes. Let's check in the markets, though, as the rally in the S&P was pretty pronounced yesterday and the Nasdaq as well. So the S&P putting in day the longest four straight days of gains for the S&P this year. Just think about that, given the sell-off that we saw this time last Monday, of course. The Nasdaq also putting in gains on the session of 2.7%. So today, the setup is pretty positive for European stocks, looking to gains of 0.3%. Yes, producer prices were softer in the US overnight. That led to the upside. CPI is the data point, of course, of the day, and then inflation data out of the UK before we get there, 7 a.m. UK time. The FTSE 100, talking of the UK, pointed to gains of 22 points, up 0.3%. S&P futures taking a bit of a breather after that four-day rally, currently flat. Nasdaq futures also in similar territory at 19,099. Let's flip the board and look cross-asset. Treasuries, the last time I checked, were pretty flat after the gains of yesterday, again on softer inflation. Raphael Bostic says he still needs to see more data to be convinced that they are ready to cut, pushing back on views and expectations from some, at least, of an imminent cut. Wants to see more data. 393 on the 2-year then, 128 on the pound. Let's watch sterling in the lead up to and around that inflation print, of course, out of the UK, 7 a.m. UK time. $81 a barrel on Brent, up 0.5%. Still holding above $81 on oil. Gold at 2,461, just down 0.1%. Let's cross over right now to Singapore. Avril Hong standing by for a check on the Asian markets. Avril.
Yeah, Tom, there is a lot going on in this part of the world. Coming into today, we were waiting to see whether Asia stocks would react the same way we saw on Wall Street to that soft US PPI, raising hopes of a downward surprise on the CPI and Fed rate cut bets. But we also had data out of China showing that bank loans to the real economy contracted for the first time in 19 years. And that really cemented the concerns about weak domestic demand, negative sentiment in the stock markets, as you can see there. But then this morning, we got those news lines about PM Fumio Kishida out of Japan and how he'll be stepping aside. Now, this throws up some political uncertainty because there's no clear consensus on who is next in line for the top job. And amid all this, it's also a very bad, tricky timing because the DOJ governor is also set to face Parliament not long from now and, kind of face the heat related to that hawkish rate hike from last month and what it did to fuel the onslaught in Japanese equities last week. So a lot to digest here. And indeed, we saw on the Nikkei, knee-jerk reaction, it flipped to declines. Let's flip the board and take a closer look at where this left the Japanese currency. You can see here the clear reaction to the news as it dropped, but don't forget the fundamentals for dollar yen are also at stake here. After that hawkish rate hike, Kishida, the deputy governor, kind of came in with comments to smooth things over and reduce some of the expectations that we're going to see more hikes from the BOJ and send the yen weaker. So this is where we are, 147 thereabouts on dollar yen. Let's flip the board again because the RBNZ today also in focus. Economists were not expecting a rate cut, but that is what we got. And this is against the backdrop of a slowing economy helping to cool inflation. Now, this decision came as a surprise because as early as May, as recently as May, the expectation from the RBNZ was that there could be further rate hikes, and even into the second half of next year was then when we would actually start potentially seeing those rate cuts. So this was something that markets were not expecting. We saw a boost for bonds as well as the stocks, and what was really surprising was how Governor Adrian Orr said that a 50 basis point rate reduction was considered. That was on the table. That really sent the Kiwi dollar declining more than 1%. Tom.
Yeah, that surprise cut coming through from the RBNZ and moving assets, as you say, in that part of the world. Quite significantly. Ava Hong with a check on the Asian markets and, of course, Japan back in focus as well. Back to the Swiss bank, of course, UBS, with this huge beat, reporting second quarter net income of $1.14 billion US, more than double the analyst estimates. Bloomberg Switzerland Bureau Chief Alessandro Speciale joins me now from Zurich for a reaction to these numbers that crossed again just in the last 15 minutes. Alessandro, what was driving the upside for UBS in this quarter? Why such positive results?
Hello, Tom. Good morning. Yes, it's a solid quarter. Profit was about double what analysts expected. One of the main drivers, one of the really solid points of these results that show that Sergio Ermotti is delivering on his promise to bring UBS back to being a profitable bank was Global Wealth Management. 27 billion of new net assets in the unit. And there was a slight profits slightly disappointed there, but investment banking instead beat on profits, and there was also a positive momentum for transactions in the third quarter. So UBS looks set to go back to steadily delivering money, and in fact it is keeping its target to buy back 1 billion shares by the end of the year.
How solid do you think that target is? We know the analysts would be looking for this in terms of details around the buyback, whether they could recommit to that, particularly given that we expect to see a tick up in terms of the demands around higher capital requirements for this bank. To what extent are the higher capital requirements that could be in the pipeline a potential headwind for this lender?
It is significant that this target was restated in the light, and it shows how solid the capital position of UBS is. Swiss regulators are looking at asking UBS to set aside more capital for its foreign units. We'll know in the first half of next year how much exactly it will be. UBS has already said it is setting aside about 20 billion more capital for other unrelated issues. That's mostly for booking old Credit Suisse assets and also for updating with new accounting regulations. Due to this, it might have to set up as much as 25 billion extra billions for this new Swiss regulatory request. UBS has been pushing back hard about these ideas from the Swiss regulators. We'll see how it ends up, but keeping on this target shows that Ermotti remains confident that it can deliver on the targets, even if there is this regulatory cloud on the horizon.
OK, Sergio Ermotti at UBS, of course, on track. Bloomberg Switzerland Bureau Chief Alessandro Speciale, thank you for the update and the reaction, of course. And in just under an hour, we're going to hear from the UBS CEO, Sergio Ermotti, about the bank's latest earnings. So you absolutely, of course, want to tune in for that interview. Now, Atlanta Fed President Raphael Bostic says he's looking for, quote, a little more data before supporting a reduction in interest rates. Bostic emphasised that it would be really bad if the Fed had to change course once it begins cutting. Let's bring in Bloomberg MLive strategist Mark Cranfield. Mark, the markets appear to have kind of looked through this pushback, if that's how we characterise it, from Raphael Bostic. It were the producer prices of yesterday that fueled the gains and the upside. Are the markets right to zero in on the data and look past the caution coming through from some of these Fed speakers?
Well, you've got traders have pushed the yield on 2 years, 5 years and 10-year treasuries all below 4%, and we haven't even reached the CPI data yet. So if this was a Shakespearean play, I think they would say that Mr. Bostic protests too much. They can see ahead. The Fed have put themselves in a position here where so much is priced into the market. For the Fed not to do anything at the September meeting now is almost unthinkable. It would be the pushback from the market reaction would probably be something like we saw last week from the Japanese stock markets. It's really something they cannot countenance. The best they can do now is to try and keep traders thinking that 25 basis points is on the table and nothing more. But of course, the data is the thing that's going to tell them over the next couple of weeks, starting with the CPI today. There's still more employment and more CPI reports to come before they meet. But clearly, when you look at the global trend, and we've just had New Zealand lowering rates as well today, you can see that the Fed is very much in line with what other central banks are doing. The Bank of Japan is the only outlier in this sequence. Inflation is moving down. Today, the core CPI is expected to be 3.2. If it comes in lower, as the PPI did yesterday, can you imagine the reaction in the bond market, which is already on fire anyway? It's going to be a pretty exciting night.
Mark, talk to us about that CPI print then. And to what extent is this then, you're essentially saying, look, it's locked in at this point. At least traders think September is locked in. So is the CPI print of today more about whether you get 25 basis points or 50 basis points?
Yeah, indeed. And also the outlook as well. One of the most interesting things that traders focused on today from the New Zealand Central Bank was they did 25. As Averill said, they discussed 50. Can you imagine if Jerome Powell stands up next week and even hints that the Fed would need to discuss 50 basis points when they meet in September? Imagine the outcry in the markets from that. The New Zealand Central Bank also projected forward into next year. They're expecting interest rates to come down something like 110, 115 basis points by the middle of next year. The Fed also has to give an outlook similar to that. Forget about the dot plots, they're way out of line anyway. But what traders will be expecting is not only is there going to be a cut in September, they will be looking for guidance that the CPI will entitle them to have rate cuts all the way through to the middle of next year as well. That's why the Treasury curve is pricing in so much. It would need a very hot CPI print tonight for the rates to back up. Even then, traders would probably think it's just an opportunity to get long again in the bond market. It's very asymmetrically skewed towards lower rates. It will take an awful lot to persuade traders they are not correct on their thinking.
OK, Bloomberg M Live strategist Mark Cranfield on the asymmetry of this bond market and the Shakespearean nature of these central banks. Mark, fantastic stuff. Thank you very much indeed with the setup ahead of CPI later today out of the US. Now, here's what else to be thinking about today then. Later today, and this is a really important gauge on the health of the US, Chinese consumer, I should say, in terms of the consumer print coming through from the earnings of Tencent and Alibaba. Are we seeing any signs that the Chinese consumer is starting to turn around? Both these companies, of course, are a very good gauge on that question, and they both report later today. Meanwhile, 7 a.m. UK time, before we get there, is the CPI print out of the UK. The inflation print out of the UK actually expected to tick up above that 2% level. What kind of conundrum will it pose for the BOE as markets price in the next cut from this central bank? Not until November. We'll see if that adjusts, of course, on the back of the print and data out 7 a.m. UK time later today. 1:30 p.m. UK, we get that CPI print out of the US then. Mark Cranfield talking to us about the importance of that and to what extent how much that is now already priced into the bond market and how it sets us up in terms of how we think about inflation evolving in the US. That really is the data point of today out of the US. CPI, given the softer producer prices we got yesterday. Will that trend continue today? You can get a roundup, of course, of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DAYB Go for the check and the stories. And no surprise that UBS is at the top of the list. There's a fantastic blog breaking down the earnings from this Swiss giant of a lender and what it means for Sergio Motti's plans to continue integrating Credit Suisse and, of course, continue to hand cash back to shareholders. Coming up, Japan set for a new leader. That's after Prime Minister Fumio Kishida announces he will not run for a second term as LDP leader. They keep coming and going, don't they, the Prime Ministers of Japan? We're going to look at the possible successors next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Happy Wednesday, everyone. Now, Japan is set to get a new prime minister. Fumio Kishida says he will not run for a second term as the leader of the long-ruling Liberal Democratic Party this September.
今回の総裁選挙では自民党が
The LDP needs to show that it's changing and that the public can see the transformation. The best way to do so is for me to step aside. Therefore, I will not be running in the upcoming LDP leadership election. I will devote myself to supporting the new leader selected through the process as a foot soldier.
OK, let's bring in, at this point, Bloomberg's Tokyo bureau chief, Isabel Reynolds. Isabel, thanks so much for joining us. Kishida, when he took over the role as prime minister, when he took office about 3 years ago, was relatively popular. That has changed. What has gone wrong for the prime minister of Japan?
It's almost a question of what has gone right for him. There's so many things have gone wrong, but one big issue has been the enormous number of scandals under his watch. First of all, of course, we had the assassination of former Prime Minister Shinzo Abe, and the aftermath of that revealed the close links between the ruling Liberal Democratic Party and a fringe South Korean-based religion, which did not go down well with most of the general public. No sooner was he sort of clear of that scandal than the next thing that came along was a huge slush fund scandal, which affected a huge range of people within his party. Senior figures had to step down. There were arrests, indictments, and so on. And though Kishida's done his best to try and throw that off, to draw a line under that scandal, it's never really worked. And in addition to that, we've seen inflation, which is something that Japan has been very unused to over the past few decades. And while companies have been raising wages, we've seen actual real incomes falling because of this inflation, which is obviously, largely due to the war in Ukraine.
OK, so those are some of the reasons that have led to a drop on popularity for the current prime minister. He's going to step down then as party leader in September. Who do we know is likely to take over? Who are the likely successors? And how do they differ?
Right. Well, the person who's always top of the media polls as the public favourite to become the next prime minister is Shigeru Ishiba, who's a former defence minister. He's largely been popular because he's distanced himself from the current sort of government, but nonetheless he is popular. Whether he could make it as leader, we don't know. His support within the parliamentary party is a bit more of an unknown factor. We also have Kono Taro, who's a very outspoken English-speaking politician. He's the current digital minister, who we actually had in Bloomberg to give an interview recently. He has been very outspoken on Bank of Japan policy, for example. He was putting pressure on the Bank of Japan to raise rates to help to support the weak yen. Obviously, that was done after he spoke, and we don't know whether he still holds the same opinions now. Also, Toshimitsu Motegi, who's the Secretary General of the LDP, he's another sort of strong contender. And he's also sort of hinted that he wants to see the Bank of Japan sort of push rates up a bit further. So we've seen several people sort of on that side of the argument. There is, for example, one female candidate, Sanai Takeichi, who is currently the Economic Security Minister, and she's much more in favour of looser central bank policy. So it's all to play at the moment. We don't know at all who is the favourite. But there are significant differences in what they've said, for example, on central bank policy.
OK, really interesting. So we'll be watching for more details from some of those potential contenders. What is expected to happen after the leadership election, Isabel? And will any of this erode the iron-like grip that the LDP has on the politics of Japan?
I think we could almost say the opposite regarding the iron grip. I mean, the LDP has been in power almost all the time since 1955 in Japan. And it is very difficult to shake them loose, as a series of opposition parties have found. In fact, you usually find when you bring in a new leader, a fresh face, that helps to improve the party's image. And if they bring in the right person that time, that could work again. After the election, which we expect in late September, we don't have a specific date yet, the new leader could opt to call a general election. The LDP is more or less guaranteed to win, but there is a chance that they could lose some seats to the opposition, which has sort of made inroads in various regions in Japan. But we do expect for the LDP to certainly stay in power.
Okay, Bloomberg's Tokyo Bureau Chief Isabel Reynolds. Really appreciate it on a busy day for you and the team. Change coming at the top of the ticket when it comes to Japan, of course, and the Prime Minister. Thank you. Coming up, switching focus, US Secretary of State Antony Blinken reportedly delays his trip to the Middle East due to regional uncertainty. We're going to get the latest on that next. This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, US Secretary of State Antony Blinken has reportedly postponed his latest trip to the Middle East. For more, let's bring in Bloomberg's EMEA News Director, Ros Mattison. Ros, then a flurry of diplomatic activity, and that is despite reports that Blinken's trip has been postponed. What do we know at this stage? The focus, of course, is on that meeting planned at least for Thursday.
Well, that's right. So these were reports that Antony Blinken was going to head to the region yesterday. Then there were reports that he has delayed that trip. But he might just be waiting to see what happens with these talks you mentioned that are due to start tomorrow, possibly in Doha, which is that, again, a big effort to try and finally get a ceasefire in Gaza in the war between Hamas and Israel. And maybe he just wants to see how they go before he heads to the region. We also know there are reports of many other US officials apparently on the way, including Brett McGurk, of course, who's the Middle East coordinator, the special envoy, Amos Hochstein also, and even the CIA director, Bill Burns, who's been quite busy in the area visiting in recent months. And so the idea is a bunch of US officials fanned out across the region, with countries like Egypt, Lebanon, all of them trying to say, everyone keep cool heads in all of this. We don't want this escalating into a full-blown war in the Middle East, but also pushing every side, every lever they can to try and get everyone over the line towards a ceasefire. And that's what those talks tomorrow really are all about.
OK, so we continue to watch any lines and any more details around those talks planned, as you say, for Thursday. Meanwhile, the US inking another big defence deal with Israel. What is the significance? What do we know about this further military support coming through from the US for that nation?
Well, this is the approval of a big defence deal that we knew was in the works, and it involves up to 50 fighter jets, F-15 fighter jets, upgrades for existing fighter jets, everything from vehicles, ammunition, radar equipment. It's a big deal. It's got a lot in it, but the reality is that these planes are not going to come at least until 2029, so there's some years away. So they're not going to affect what's happening on the ground at the moment. But what they are is a signal that the US, as a key ally of Israel, is going to continue to supply it with weapons, particularly weapons that help it defend itself. They're more cautious about offensive weaponry. And that's what set off the issues back in May when the US held tight to a shipment of large bombs. They were concerned about those bombs making their way over to be used in Gaza against potentially civilians. That caused some tension with the US. In fact, Benjamin Netanyahu accused the US of holding back on military aid. He said was crucial to his war in Gaza. But that seems to have now been papered over. The US has said they've got this deal, it's happening. Again, this equipment may not be coming anytime soon, but it is a signal of that long-term relationship that the US and Israel continue to have.
OK, Bloomberg's EMEA News Director, Ros Mattison, with the important update out of the region and that continued military support from the US to Israel. Ros, thank you. Coming up, UBS more than doubling the profit estimates in terms of the latest earnings coming through for the second quarter. Strong client inflows to the crucial wealth management business. We're going to have all the details next. Stay with us. This is Bloomberg. Good morning. This is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda. Inflation optimism. Asian stocks extend Wall Street's rally after a soft reading on US factory prices adds to hopes for a rate cut. But the Fed's Raphael Bostic warns he wants more data before easing. We're going to preview today's CPI print later. UBS posts higher than expected profit in the second quarter. That as net income hits $1.1 billion, smashing the estimates. We bring you the details Plus, breaking up is hard to do. We reveal the US Justice Department is considering a rare bid to break up tech giant Google after a landmark antitrust ruling. We bring you our scoop. Let's check in on the markets, though. European futures pointing modestly higher then after the gains that we saw yesterday. The biggest four-day rally for the S&P. Softer producer prices feeding into the upside across equities. Gains for treasuries as well. Yields lower. Treasuries currently relatively stable. European futures pointing to upside of around 0.4%. The FTSE 100 looking to add 22 points. We get CPI, inflation data out of the UK, 7 a.m. UK time. We'll break that for you, of course. S&P futures flat right now alongside Nasdaq futures after the gains. What are the Nasdaq at 2.4% yesterday? Investors, it seems, when it comes to the US, taking something of a breather after the rally that we've seen in the last few days. Let's flip the board and look cross asset then. I talked about the relative stability in the bond market in US Treasuries after the gains that we saw yesterday. The 2-year at the front end, 394 as things stand. 128 on the pound. We'll watch the currency, of course, and to see to what extent it's volatile around that inflation print of the UK. Brent, $81 a barrel, up 0.6%. Gold, down 0.2 at 2,460 per troy ounce. Let's get to the earnings story of the moment then. UBS reporting second quarter net income of $1.1 billion, more than double the analyst estimates. Bloomberg Switzerland Bureau Chief Alessandro Speciale has been across all the numbers for us and brings us the context and the details. Joining me now from Zurich. Alessandro, talk us through what led to the upside from UBS in the second quarter.
Hi, Tom. Good morning. Indeed, it was global wealth management was one of the key drivers here. $27 billion of new net assets under management. That's a solid result, and that shows that UBS shows how solid and how positive the brand of UBS still is and continues to be even after the Credit Suisse acquisition. Investment banking also reported a strong profit. There was stronger client activity. They see positive investor sentiment. They see more transaction activity, especially from institutional investors. So that shows that the two core activities for UBS are going strong. And let's not forget, of course, that UBS just reorganized the way it runs its global wealth management business. There is Rob Karofsky and Iqbal Khan as co-heads, one in charge of the US business overall, one in charge of the Asia business overall, and this is also shaping up potentially the battle to succeed Sergio Ermotti as CEO in a few years' time.
Alessandro, how much scope then does this bank have? How much wriggle room do they have to return more capital to shareholders?
This is very interesting. UBS has reconfirmed its target to buy back 1 billion shares by the end of this year. This is a strong statement, especially because there are regulatory headwinds on the horizon. UBS has already set aside more capital for new capital rules that are coming in and to take account of how Credit Suisse assets are accounted for, but there is on the horizon, Swiss regulators want UBS to set aside more capital for its foreign units, could be as much as a $25 billion extra capital requirements. We'll see how it goes in the first half of 2025. But UBS has restated its goal to buy back shares this year, and it has a further goal that we'll ask about is $2 billion by 2026 buyback.
Alessandro, you have followed this business very closely for a long time. Is there anything else that stood out to you from these earnings that gives us a sense of the direction going forward for this bank?
What's striking is that UBS is delivering a consistent implementation of the Credit Suisse acquisition. We know it was really complex. It was a mammoth task. There was a lot of legal unknowns. It's a very complex structure, two very complex structures to bring together at a global level. There were the closing of some of the Credit Suisse legal entities, which will allow client migration from Credit Suisse to the UBS systems in the second half of this year. It is a mammoth task, but it is proceeding regularly. There are, of course, hiccups. This year is the real year when the tire hits the ground, where the real complexities of bringing two globally significant banks together. But so far, it seems that Ermotti is managing to keep this mammoth process on track.
Yeah, this is when the rubber hits the road, isn't it? $27 billion in net new assets in terms of global wealth management in the second quarter and seeing positive investor sentiment. Bloomberg's Switzerland Bureau Chief Alessandro Speciale with the breakdown and the importance, of course, of those UBS earnings. And in just under half an hour, we're going to hear from the UBS CEO, Sergio Amotti, on those earnings. You do not want to miss that conversation. Now, Carlsberg has increased its profits, staying on the earnings story, and the growth outlook for the year as cost controls help the Danish brewer to offset weaker consumer demand. It says organic operating profit will rise between 4 and 6% this year. That's up from the previous guidance of between 1 and 5%. Tighter cost controls help to counter a smaller than expected rise in volumes in the first half of the year. And Carlsberg's CEO will join us just after 7 a.m. UK time with more reactions to those earnings. So stay tuned for that interview as well. Norway's Sovereign Wealth Fund has trimmed its stakes in Meta, Novo Nordisk and ASML in the first half. The world's biggest sovereign fund added shares, though, in its 3 biggest energy holdings, interestingly. Exxon, Mobil, of course, Shell and BP. At the end of the period, Apple, Microsoft and Nvidia were its 3 biggest holdings. Now, the US Justice Department is said to be considering a rare bid to break up Alphabet's Google. That's after a court ruling found the tech giant monopolised the online search market. Bloomberg's Annabelle Drulas joins me now for more details on what is a Bloomberg scoop. Annabelle, this would be momentous if it happens. We know they are now considering it. What details do we have from our sources on the ground tracking this story?
Yeah, this has been one of the most read stories on the day, Tom, but essentially it follows that ruling we had last week where a US judge said that Alphabet essentially had illegally monopolised the internet search market. So that was sort of the underlying liability ruling. Now we're moving toward the remedy for this. And so the DOJ needs to present a proposal to the judge in the case for how it thinks that this should be addressed. What we're hearing from sources here is that the DOJ is really considering a raft of different options, but one of the main ones is that it could push for Google to be broken up, which is really significant because we haven't seen that sort of push since Microsoft more than 2 decades ago, and that was unsuccessful. But the units possibly at greatest risk of divestment here, there's the Android operating system, which is on around 2.5 billion devices worldwide. There's Google's web browser Chrome, and also possibly the sale of AdWorks, which is the platform that Alphabet uses to sell text advertising.
OK, so that's potentially, arguably, the nuclear option for the DOJ. And you touched on this, some of the less severe options. What's on the docket when it comes to some of those potentially less severe options? And what kind of time frame were we looking at, Annabelle?
Yeah, so I think it sort of relates back to what was the crux of the case in the first instance, which is what the judge highlighted in the finding here, that Alphabet or Google was found to have paid billions of dollars to companies like Apple, like Samsung, to make Google the only search option available on its devices, and so, or the default one. And so that monopoly was found to be illegal, and that's what the judge could rule here, that essentially Alphabet could be prohibited from signing those sorts of agreements or contracts in the first place. In terms of the timing of this, it really depends on when Alphabet is able to appeal this decision. If it's before the remedy trial, then it could be pushing the whole thing out by a year or two. If it's after the remedy trial, then again, this could just happen in the next few weeks, a few months. It could be quite soon, Tom. OK. Bloomberg's tech reporter Annabelle Drulis with the details on that Bloomberg scoop around Alphabet's Google. Thank you. Now to some other stories making news this Wednesday then. Starbucks shares have jumped. Wow, did they jump? After the firm ousted its CEO and hired Chipotle's Brian Niccol as its next leader. Niccol starts his new role next month. The shake-up comes after activist investors amassed stakes in the company. The abrupt exit adds to a record number of CEO departures from US companies. Now, Paramount has started laying off staff after closing a TV production studio. Last week, the entertainment company said it was slashing 15% of its US workforce, amounting to around 2,000 positions. While reporting second quarter results last week, co-CEO Chris McCarthy said that the staff reductions would impact marketing, finance and other departments. Coming up, UK inflation data is out shortly, in just under 20 minutes' time, following yesterday's unexpected dip in unemployment. What will it mean, then, for the Bank of England's cautious shift towards rate cuts? We'll get the latest.
This is Bloomberg. Welcome back to Bloomberg Daybreak Europe. Now, in about 15 minutes' time, we're expecting to get data showing UK inflation picking up for the first time this year. Joining us for a preview and a breakdown of what to expect then, UK correspondent Lizzie Burden standing by. Lizzie, what are you going to be watching for from this data set?
Well, Tom, let me just take you back to when we had inflation coming back to that 2% Bank of England target. You'll remember the celebrations in Downing Street. Rishi Sunak was so convinced that the economy had come back to normal that he called that snap election. Well, as you say, today we could see inflation rising again to 2.3% in July. This is because the helping hand of energy bills is fading out. And we've already had this week a warning from the arch hawk on the Monetary Policy Committee, Catherine Mann, saying don't be seduced by this return to the 2% target. She's been concerned about the labour market. And indeed, yesterday, Tom, we got the latest jobs data. Yes, wage growth slowed in line with what officials wanted to see, but you also had unemployment unexpectedly falling and companies hiring at the fastest pace since November. So it really complicates the picture for the Bank of England because it really suggests that there's underlying strength in the UK economy. The question today is, do we see more of that? At the moment, you've not got investors expecting another BOE cut till November. If you get an uptick in inflation, that would support the case to wait a bit longer.
We also got grocery inflation data yesterday, along with that wage data, the labour data. We got grocery data. What did that tell us about what's happening in terms of price pressures here in the UK?
Yeah, these are numbers from Kantar, and worryingly, they showed that grocery inflation rose for the first time since March 2023, so up 1.8% from a year earlier. And it's not just the Kantar numbers. We've also had a report from the Institute for Fiscal Studies saying that it's the poorest people in Britain who are being affected. This really a headache for the new Chancellor, Rachel Reeves. So the IFS figures show that the price of the cheapest items in supermarkets jumped by twice as much as the items that are most expensive. It's for the period 2021 to 2023, but by their sums, the poorest quarter of households are paying £100 a year more for their groceries. So it's very difficult politically, economically for these households, but on the corporate front, it's kind of actually, I should say, a boon for the discount retailers, the likes of Aldi and Lidl. They've seen their sales increasing. You've seen spending on deals climbing 15%. And at the same time, one of the big giants in the supermarket world, Asda, has seen its market share fall 1.1 percentage points. So really struggling to compete in this tough market.
We get inflation then. We touched on this, of course. You've given us the details. It drops at 7 a.m. UK time. There's some reporting that maybe this is the last time these official numbers are published at that particular time. Talk us through what's happening, what the thinking is on that front.
Well, Tom, I know you'll have no sympathy for economics reporters having to get up at the early hour of 7 a.m. I know you're an early bird like me, but there has been concern that ever since the Office for National Statistics moved the publication time for all these economic releases, not just inflation, but the jobs numbers, GDP, retail sales as well, from 9:30 a.m. to 7 a.m. during the pandemic, that actually this is creating volatility in the market because the numbers are being published before the market opens. So the Office for National Statistics is going to consult with the city on these concerns, and maybe, just maybe, my old colleagues on the economics team will get a bit of a lie-in.
Oh, bless them. OK, UK correspondent Lizzie Burden, thank you very much indeed. They could all do with the line. Thanks, Lizzie. It's a busy week, of course, for you and the team focusing on the UK data out this week. We're looking ahead then to CPI just in 13 minutes' time, and we'll bring that for you when it crosses. Now to some other stories making the news this Wednesday. Shein has enlisted a former top EU official to bolster its lobbying efforts, taking a more active stance toward potential regulatory scrutiny. This as it plans, of course, a stock market debut here in London. Shein faces a raft of issues, including a debate about whether to impose customs duties on cheap parcels, which would be a potential game changer for Shein and other low-cost online retailers. And a consortium led by CK Infrastructure Holdings has agreed to buy a portfolio of UK wind farms from Aviva's asset management arm. The group will pay about £350 million for the assets, which include 32 onshore wind farms. This as the conglomerate backed by Hong Kong tycoon Victor Lee considers London for a possible second listing. Plenty more coming up. Stay with us. This is Bloomberg.
Growth is slowing, okay? Earnings expectations probably are still too high for the second half of this year. And a Fed that's reluctant to be proactive, okay? And I don't disagree. People are criticizing the Fed. I'm like, well, look, they're just being data dependent. I mean, and so they're doing their job. They're going to react if they need to. If they overreact, then that probably exacerbates the carry trade problem.
Morgan Stanley chief US equity strategist Mike Wilson there on the Fed's policy path. And to what extent will that be influenced by the CPI data out later today? It is the inflation print of the day. Of course, after UK inflation drops in a little under 10 minutes' time, then the focus switches to CPI out of the US. Expectations that on core and the headline basis, you're going to get an increase of just 0.2%. That, of course, is month on month. Here's the detail in terms of how the inflation story in the US has been evolving and how that demand component on the basket is starting to cool. This is the breakdown then from Bloomberg Economics. Yes, price growth on a 3-month basis is still running above historical averages for the US, but some of the inputs are starting to cool and starting to suggest there is a more constructive outlook for inflation stateside. The purple line there in terms of the chart coming through is the demand picture, and you can see that has started to squeeze. And in terms of supply and monetary policy, also playing a bigger role now. You can see that in green and yellow in terms of the squeeze on prices. So just in terms of the detail as to how this is transpiring stateside, again, as we look ahead to that CPI print, with expectations that it will do nothing but reinforce the bets of a September cut from the Federal Reserve. We'll see if that holds up, of course. Let's flip the board and have a breakdown of what to expect then from the UK and CPI that crosses in about 9 minutes' time. You're actually expected to see a pickup from the current headline basis of 2% to around 2.3%. That's the headline number. In terms of the retail price index, that's expected to tick up to 3.3% from 2.9%. It's a more complicated picture, arguably, for the Bank of England. It went ahead with its first cut. Markets don't expect the next cut until November. To what extent will the data out today inform that decision? We saw, of course, wages coming softer than expected yesterday, but the unemployment number coming in lower. So it's a more complicated picture for this Bank of England. But this is the trajectory for CPI in the UK. And again, we'll break that data for you and those numbers as they cross in about 7 minutes' time. There's plenty more coming up this morning on Bloomberg, including, by the way, interviews with the CEOs of Brewer Carlsberg, the shipping giant Hapag-Lloyd, so supply chains in focus, a touch, of course, on the consumer, not just in Europe, but in China and the US as well, really consequential. And then, of course, a big interview with Nikolai Tangen, the Norwegian wealth fund, reducing some of their bets on AI, ramping up some of their bets in the oil space, still very exposed to NVIDIA. That conversation will be fascinating. Some of those interviews coming up in the next few hours. Next on the opening trade, though, we're going to hear from the UBS CEO, Sergio Motti, on the Swiss bank's big earnings beat, more than double the estimates coming through in terms of the top line for UBS. That interview in just a few minutes' time. The opening trade is up next. This is Bloomberg.